Let's go through a trading strategy I like to call the inverted retail. This is a strategy that I've developed over the countless amount of years that I've been trading and understanding technical analysis. The number one rule to technical analysis is have news or sentiment analytics to back up your argument for your reasoning for the trade. But there's also a lot of trades that are based off volume within the market. At GFT, we don't like to hide any strategies or keep you guys from pursuing your trading career to its optimal performance. So I'm going to be breaking down the inverted retail strategy for you guys that I've developed for myself. So without further ado, let's get straight into the chart. So the first thing we're going to really look at into is the idea of break of structure. So usually when a trader is trading on an uptrend, we get given these major pivot lows. So this low and this low are major pivot lows for us. What a lot of traders like to see is this uptrend become a downtrend. So what they'll indicate to themselves is a break of structure by here. So we're going to call this a BOS. Once this BOS has been, broken, or this structure has been broken, the market likes to see an impulse back into a specific point of interest and then a continuation up down. However, there's no real indication for an uptrend or a downtrend to stop unless we have sentiment or news to back up the argument. So for example, CPI comes out and it becomes negative for the euro, then the euro is obviously going to stop its uptrend and potentially have a downtrend, and this usually goes into a reaccumulation phase, etc. So we won't go into the details of it, we'll just go into the technical analysis side of it that you guys probably are aware of. So instead of looking at a BOS like this and look for a downtrend, what we're going to do is identify this as a reaccumulation. So put in simple terms, the market is buying, 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 and then the market then starts to sell, sell, sell. Ideally, that is the idea. But in regards to sell, 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 we're not going to look at sales. We're going to look at these traders buying up at a cheaper price, at a discount. So once we come into this discount, we want to see some types of technical analysis to indicate us the market wants to push up from this reaccumulation, all these purchases in this discount, and then look for a move up to swing this current high. Currently, I'm in a gold trade, and I'll show you guys my idea with it. So if, for example, we're looking at this from maybe another idea, we can go, okay, the market's in this overall uptrend, we're creating higher lows and higher highs, and then the market swings up, creates this high, and then the market swings the high by here. Now we've come down, we can see that this level has been broken, and now that can be classed as a reaccumulation phase for us. But most people, that can be classed, let's get rid of that, this can be classed as a simple BOS. So now the BOS has been created. What the market is looking to do is maybe go for a fair value gap here, or an order block, or a breaker, or whatever it may be, and people are looking to take shorts. So a lot of people are getting shorts at this level here, as you can see, this move up and then this mark down. A lot of people are getting shorts here, probably people get shorts here, here, here. But once the market actually starts breaking above them shorts, what's going to happen to those shorts is what's important. Those shorts are going to get stopped out. And once those shorts are stopped out, it will create a squeeze to the top side. And this is the idea with the trade. And again, no trade in the industry or the market is 100% win rate. This is not 100% win rate. It doesn't work all the time. But we'll go through examples on Euro USD to help you guys understand it even more. This is a really good example here. So if we're looking at, let's go for a 5-minute time frame, because I'm sure some of you guys will have shorter time frames to trade from. Let's say, for example, we have this structure here, and this is a main low that was created. If we look at this low here, the low was swung. And as you can see, once we come back into these pivot points, you can see maybe we have an order block on here. Again, I'm only doing it from high, so I'm not actually looking into it massively. You can see we come into this order block here, and have a huge rejection from that zone. That to a lot of traders will be an indication the market might want to keep breaking down and swing this low. And it could. There is a possibility. But the market's going to keep going on up unless it has a reason to go down. So we're overall on an uptrend, so why is it just going to go swing all these lows down here, right? It kind of doesn't make sense to me once you start to understand. So as you can see, we had that sell-off here, and then what happened? This high got swung, and then usually this high is where stops are going to be. So let's say, for example, let's take it back to make you guys simple, right? Let's say, for example, we spot this kind of supply zone up here. Maybe we go for a short from the supply zone, and our target is going to be below that low. and our SL is either going to be here or just above this high. So we'll say above this high. Let's take it back a little bit more, and we are tagged into the trade. The market then falls down, and we're thinking, oh, brilliant, all we need to do now is swing this low. We're on the other side going, this whole bigger picture image, this reaccumulation phase, and then all these shorts are going to get squeezed for a move to the top side. And as you can see, both stop losses in this ideal world have been swung. Now that these levels have been swung, ideally the market is going to run high and break this high here. Is this a reasonable zone to get in? I do not think so. And the only reason is because you need to take aware of your stop loss. When you look at positions like this, if we want to go long around here and maybe go for an impulse up into those zones, is your stop loss going to be below this low, or is it going to be below this low or this low? So you see your risk to reward is slightly off. So I wouldn't look at getting into a position here. I like to play buy stops or sell stops, and let me explain how. So I'm going to just pull up a example. Let's say, for example, we have an uptrend like so, and then the market has a downtrend like so, and it's creating lower highs, and then we eventually swing this low here. Number one is we're going to look for a break above a previous swing lower high. So if these lower highs are developed and we swing above that zone, that could be a good indication to buy stop. So we're not looking for impulse and then retracement, we're looking to buy on the break above a specific zone. So now we can have a look on a buy stop there, and then maybe a bit of consolidation, and then a pop into that high. Okay, that's ideally what we're going to be looking for. However, if we don't get something like this, so maybe we miss our entry, for example, maybe we get an impulse and then we're getting a little bit of a retracement here. What we can do is just move this level to this previous high that was created. So that's the impulse of the buyers. And then once that's actually treated with respect and we break above it, we can look for longs from there. So they're the buy stock models that we're going to look for on this strategy. Very, very simple. So let's look for examples. I kind of want gold to be pushing up because I am in gold longs at the moment. And as you can see, gold longs are currently fine again. So let's go through on this example why I'm in current gold longs. So you can see here we have an impulse. We have a nice structure. You know, the market's kind of come back down into these pivot points. We had a huge pump up. We've had a huge move up to the top side. Now we've had a sell off. Can we see how weak this sell-off is? Can we see how wicky and the price action with this sell-off is not very strong? Let's look. This is a good sell-off. So this is a good sell-off. This is a good sell-off. Very, very big and bold black candlesticks on my chart, whereas this is a bit confusion. It doesn't know what to do. So if we look into this chart, what I looked at is mainly these lows here. You can see these are the biggest lows. So if we just replay it here, so these are the biggest lows in the market. And if these lows get swung to traders, maybe traders might say this is a manipulation above this high. Maybe these are majority lows, and then the market swings these lows. That could be classed as our BOS, as most people call it. And then we have an impulse back into a specific zone. Maybe we can go for that small supply zone there, like so. And again, when we have rubbish price action like this, you're not going to get points of interest, and you're just going to be like hindsight trading. So now a lot of people are getting sells in this position. If, for example, we break above this high that we spoke about, if we break this high here, then a lot of those shorts that the market's currently in are going to get swung, and that is what we want to see. And as you can see, gold is already pushing up. Can we just, like, this is in real time right now, guys, so can we just see this price action versus this price action? See how slow moving this is, and see how poppy this is, see how, like, really good this is, because that's what we want to be seeing. You know, as a trader, this is my only advice, is price action will tell you where the market wants to move. And in this current phase, we've had this swing below this low. A lot of people are getting shorts around these levels. If the market breaks up and breaks these shorts, then it's going to go and swing this high. It's a very simple kind of counter trend trading strategy, I guess. It's like saying we're in a downtrend and most people are probably going to play the continuation of the downtrend, but we're not going to look at this downtrend as a downtrend. We're going to look at this as a reaccumulation to get in at a cheaper price. And maybe we can look for points of interest like this imbalance by here that got tapped into. That's why it had this downtrend. Or maybe you can say this oil block or this, you know, demand zone, whatever it may be. And that's the reason we've come into these zones and the overall momentum is strong. Okay, so why would it stop now? And you can see we're wicking from this zone here, so you can tell that there's a lot of price action coming in. There's a lot of you know, a lot of good things. And currently, time wise, as I said before, we're in a good time zone. So the market's in a good time zone. We're in the kind of prime time of the market where the US market is opening up. So let's go through one more example. There you go. Look at that. Euro USD had a massive pop there. Is gold going to have a big pop? Because I am in gold longs. But yeah, you can see, like, I've literally I could have taken a Euro USD long, but again, like I said in the start of the video, the risk to reward wasn't there, and gold is looking to have that pop there. If we pop these highs, it would just swing this short. So we'll come back onto gold in a minute and have a look how it's performing. But let's go through an example I've seen on Euro USD before. Yeah, like this is a prime example here. Yeah, we do have a bit of consolidation. This is probably not the best area to trade from, and this selling price action wasn't very good. However, a lot of people are going to be playing the continuation of selling price action, so we have kind of an overall uptrend on this whole basis, and this is just a period of consolidation. Just make sure everything's recorded, all good. And then we have this zone here where we have this big sell-off, and then the market comes back in, attacks this level. Look at this price action here. Let me just clean my chart a little bit and zoom in for you guys. Look at this price action here, really weak, really weak. And if the market wants to tell us it wants to continue on up, we want to see a break above this high. That's our main pivot point from this overall period. And we could have bought stop this high, okay? Could have bought stop this high and played the continuation to break these highs, which is technically what I did yesterday on gold, I believe. What did we do on gold yesterday? Oh no, I did trade that yesterday. Yeah, I traded this on Euro USD yesterday. Yeah, I traded this break on this Euro USD. Yeah, and it's like, so yeah, I did trade that on Euro USD. I'll try to put a screenshot in this video. But yeah, that's the idea with the trade. You want to be looking for the market to break down over on an overall uptrend, make a key pivot point to trade from, and then look for buy stops above that zone. Should we talk about sell-in price action? Let's have a look at sell-in just before we end the video. So for example, if the market is having a sell-off like so, and then we see the market break above a pivot high like so, that's going to be most people's reversal break structure. If we get a small movement down like so, you're going to be looking for potential longs here. And what we want to do is look for the market to break above these levels like so, tease it, and then once we break down against this pivot point here, we'll play the sell stop and play the continuation on down. And this all here is just a reaccumulation of sells, so it's just playing the continuation of the trend. Look for the market to give you an indication that it potentially wants to move higher, look for it to fake, and then look for sells for the continuation. If we break above a level like this and continue on, stay out of the way. Okay, stay out of the way. It's just going to be a small reversal. Wait for these major structure levels to break to tell us continuation. Okay, let's just quickly look at gold before we log off. Okay, so it is selling from that zone a little bit, which is fine. Again, my stop loss is wide, so I've got a lot of risk. But you see the liquidity it's created now. So once it breaks these levels, it will have a nice pop, and that's what I'm waiting for. So we'll see. But yeah, I hope you guys enjoyed the video. A bit of technical analysis to kind of wire your mind slightly different, look at the market slightly different. I hope this video helps, gives you a bit of intel on the way I'm trading currently, and I hope it adds value to your trading. At GFT, we only provide the best technical analysis and educational support, so I really hope this helps you guys throughout your GFT accounts. I appreciate you all hopping in for this video as per usual, and I will see you in next week's video.